What's going on, guys? Connor back at you. So, for any of you beginner traders, or really just anybody who want to further that knowledge as far as the market goes, this doesn't really relate too much to penny stocks or lower cap stocks because what we're going to talk about is the S&P 500, and really this is kind of an important topic or kind of just like a little important lesson to really know about, just so you have a better understanding of how the market actually works and maybe what big time investors are looking at. And really, it's just good to have an overall understanding and a better knowledge of the overall market, right? So, for you beginners or for anybody that just wants to know in general, have you ever once heard someone say the SPY is going up, or the SPY is ripping, or the SPY is washing, or the S&P 500 is up for the day, or the overall market is up for the day, the overall market is down for the day? Any of those things that I really just mentioned apply to the overall stock market. The S&P 500 is an index. S&P 500 is an index that basically lumps all the Fortune 500 companies. And what that means is all the Fortune 500 companies are all of pretty much the world's biggest large cap stocks. So Facebook, Apple, Google, PPG, companies like that. They take all the biggest companies, the Fortune 500 companies, and put them into an index, and that's from the Standard & Poor. Now, with that being said, that index or that fund that you're looking at, so if you were to go onto your computer, and we're going to go there in a minute, you type in the ticker symbol for the S&P 500, it's somewhere like $2,500 per share. Now, for a lot of people, that's not really feasible, so they have created an ETF-based ticker symbol fund, whatever you choose to call it, that's called the SPY, SPY, right? And we're going to look at this in a little bit. But the main understanding is, as a trader, whether or not you trade large cap stocks or not, or you're a penny stock trader, whatever the case may be, it's always good to know or take a look at through various times in the day what the overall market is doing. And you can simply do that by just typing in the ticker of SPX or SPY. And we'll go into that in just a second here. But you want to type them in, you want to take a look and just see what the overall market is doing, because that can kind of give you an idea as far as what direction the market's going, what you can expect out of the market today. If the S&P is just kind of just flatlining, that just really means it's consolidating. You'll know that the market may be a little bit slow today. If it's really going down, you may put kind of a thesis together that maybe the market's going to be slow if you're a long biased trader. If it's going down and you're a short biased trader, it might be a better day for you to be trading. It can give you the idea of how aggressive you may want to be when it comes to trading. If it's the market's not going in your direction, maybe you want to kind of scale back a little bit, take a little bit smaller share size, really. So that's what it really comes down to, right? So let me go ahead and share my screen so you guys can see what I'm talking about. All right, so on the top we have the SPY. So actually, let's just focus here on the SPY real quick. So this is the SPY. All right, this is the ETF fund for the overall market. The reason this was really created is because a lot of people can't afford to actually buy any shares in the SPX, the real S&P 500 fund, because it's just so expensive. So it's not really feasible for a lot of traders. Okay, and there's still a lot of traders out there that would like to get in on the action that the S&P 500 offers. So the way that they did that was by creating an ETF that basically it has all the same companies, but just in an ETF form. So it made it a lot cheaper. And long story short, the SPY basically follows identical to the S&P 500, all right? So let me pull up the other chart that we just had up here. All right, so we're going to type in SPX. So the chart on the bottom actually contains, why does it look so goofy? Oh, it's because I deleted some stuff off there. So let me just go on a 1 minute chart, right? And so I don't have some studies down here on this chart, and that's okay. Let's wait for it to load here. All right, so it's okay that I don't actually have the studies on this one, but you'll get the overall understanding, right? So this is the SPY on top. This is the ETF-based fund that has all the same companies within it as the S&P 500. Okay, and as you can see, the charts move, and I'll put this on a 5-minute chart. Let's do this 5-day, 5-minute. All right, and we'll come down here and put this on a 5-day, 5-minute chart as well. And you can see that both of the charts correlate basically 100% exact. And that's because both of them have the exact same companies, you know, lumped into the actual ticker symbol or the fund index, however you'd like to choose to name it, right? So stock price goes up, kind of consolidates, then it drops down, then it pops up, then it goes down, then it pops up and goes down and down and down and down. So this, what you're looking at, is really the makeup of the overall market with all the big, large cap companies that are very famous, like, you know, Google, Facebook, Apple, and those and whatnot. So the main takeaway from this is, as a trader, you want to still keep an idea, or you still want to keep the S&P 500 in the back of your mind, whether you're a low cap penny stock trader and the S&P 500 doesn't relate to you as strongly as a trader who would be trading higher price cap stocks or higher price stocks, of course. Now, it's still good to have a general understanding of what the market is doing each and every day, right? So if you look here on this day and the market's going down, 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 or like this day and the market's going down, 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 you can probably expect, as a long bias trader, your day might be a little bit slower and you're not going to have as many good plays, right? You know, if the market's going down, that doesn't mean all the stocks that make up the market are going down. It just technically means that the overall market is bearish, and it's going to be a little bit more difficult for you to find long bias trades, right? And if the market is going up, people who are short bias are going to have a little bit harder time trying to find those stocks to short, considering the market's actually going upwards. So every day, the main takeaway is every day when you're coming in the market to trade, at least hop on or have the S&P 500 running in the back, you know, maybe somewhere that you peek in on every couple of hours or whatnot, every 40 minutes, or, you know, at least once a day, just to give yourself a general understanding of which direction the market's actually heading, and where it's going, because that'll just in turn give you a better idea as far as what the market's doing, and maybe you can adjust your trading strategy accordingly to the way the market's going, whether that be, you know, being more aggressive. You know, if the day looked like this, you could consider maybe being a little bit more aggressive. But if the day's turning out like this, maybe scale back a little bit and be a little bit more patient waiting for your trades. So that's all I have for you guys today. I hope you like it. If you like it, let me know. If you don't, let me know. Give me a thumbs up, like, and subscribe, and I will see you tomorrow morning for those that tune in to the Boiler Room live stream pre-market watch list.